Hello everyone, welcome to Best of Us Investors. We as a tribe are gathering in the Discord server, where we share Carrie's portfolio, Carrie's buy and sells in real time, and we have live discussions every Mondays before the market opens and right after the market closes on Fridays in the Discord server. The stock analysis team also analyzes stocks based on the votes from the tribe members, so hope to see you all in the Discord where the link is listed in the description to join. We would also appreciate if you can subscribe and hit the like button, which will help our stock analysis videos. Now let's get started with our stock for this week. Today we'll be talking about Jumia Technology. The ticker symbol is JMIA. Jumia Technology is often thought of as the Amazon of Africa, but surprisingly, it's a German-based company founded in 2012 with more than 4,000 employees. Both the co-founders, Jeremy and Sacha, are from France. Jumia Technology is in the e-commerce space, focusing on the African consumers, where they provide a platform that connects sellers with consumers, logistics service that enables the shipment and delivery of packages from sellers to consumers, and payment services. They offer various products such as fashion, beauty and personal care, home and living, fast-moving consumer goods, smartphones, and other electronics. And additional to products, they also provide various services, including restaurant food delivery, as for example, McDonald's, KFC, Pizza Hut, Domino Pizza, hotel and flight booking, bill payments, and instant delivery, and more. Now, if you look at the locations, so they are active in 6 regions in Africa, consisting of 11 countries. They are also in Portugal, UAE, and China. And if you look into their official website, it says that there are over 110K sellers on the platform and more than 40 million products with approximately 6.9 million active consumers across Africa. Now, if you think about it, one of the major issues with e-commerce in Africa is the logistics due to their infrastructure of transportation. So Jumia Logistics Services consists of a large network of leased warehouses, pickup stations for consumers, and drop-off locations for sellers, with more than 300 local third-party logistics service providers. Another issue would be the payment system in Africa, where Jumia Technology has designed their own payment service, Jumia Pay, that facilitates online transactions between sellers and consumers and provides certain people with financial services. They also allow consumers to complete online payments such as airtime recharge or utility payments. I wasn't quite sure on the numbers of the African market, the total addressable market, but what I found interesting was that a number of well-known entrepreneurs such as Jeff Bezos, Mark Zuckerberg, and Jack Dorsey were actively getting involved in the African market, thinking that Africa may actually be a market that has an opportunity as big as China and India. So for instance, Jeff Bezos has invested in an African fintech company called Chipper Cash last year. And Mark has met with a number of tech leaders in Nigeria. And Jack Dorsey has also visited several times in companies in Africa and was actually planning to stay in Africa for about 6 months in 2020, which didn't happen due to the pandemic. And also Africa is a home of 54 countries with approximately 1.2 billion people, where the median age is pretty young. The median age is under 20 years old. And in 2019, 6 of the top 15 fastest growing economies in the world were projected to be in Africa. And if you look at the growth of the internet users, it's pretty impressive, where the internet users increased more than 116-fold in 2 decades in Africa, from 4.5 million to 523 million. In my opinion, I think Africa is definitely a growing economy and would be interesting to keep an eye on companies like Jumia that's focusing in the Africa economy.
So regarding the partnerships, they have a partnership with Twiga, and Jumia and startup Twiga are partnering to deliver produce in Kenya while maintaining proactive measures to prevent the spread of COVID-19. So Twiga is this produce company, and Jumia is partnering with them to deliver produce on their e-commerce platform. And they're also maintaining active measures toward COVID-19 and taking that into accountability as well. They have another partnerships going on with Vivo Energy. Vivo Energy makes these fuel outlets, and As per the agreement, Jumia will set up pickup stations at Vivo's 2,000 fuel outlets, which will let customers pick up orders as well as make payment. And it will allow the people to collect or return online orders that are made on Jumia's digital platform. And Jumia's customers will be able to also place and pay for Jumia orders at select service stations. They also have a partnership with RB, and RB is a global health products manufacturer. And with the partnership, Jumia will help consumers get access to affordable hygiene products at the lowest price. Now, the partnership is a global response towards COVID-19 pandemic, and RB is financing free shipping for all of these products. The products include soap bars, disinfectants, liquid hand wash, and all of these other hygiene products. What Jumia is doing is they're going to be selling these products at an affordable and lowest prices on their e-commerce platform. Jumia is also partnering with over 1,000 entrepreneurs, investors, and students in order to successfully develop a platform which promotes more entrepreneurship and startup movements in Africa. The competition type of challenge is that there should be a service created that does just this, and it promotes entrepreneurship and startup in different regions of Africa. And the one who creates or wins the contest gets a winning prize of 25,000 USD and an ability to work at Jumia from any of its offices in Africa. So those are some of the main partnerships I think Jumia has going on right now. Moving on to the cons. First thing is that the PS ratio is pretty high. It's 13.61. If anyone's looking for some strong value plays, this is probably not it, as the PS ratio is pretty high. And they also do not have a steady growth of revenue. The third thing is that they're trying to establish e-commerce in Africa, and that poses a risk as many African countries that they're working in are not fully developed, and they may have trouble getting in sales and running their business. And they recently also left 3 countries, and they left them to focus on more established nations like Nigeria. So the infrastructure and the digital business there is kind of hard for them to work with. The other thing is that they're still not profitable, and they also have a negative operating margin, and they have improved that from negative 150% to negative 111%. They're still not profitable. And Africa is also a very tough market, and perhaps being the most underdeveloped region on earth, majority of the people aren't connected to the internet, and it's going to be difficult for Jumia to lay out proper plans and infrastructure for digital e-commerce and other digital service needs to operate successfully in Africa. They also have negative operating cash flows, and they also rely on external financing in order to fund their operations. If the external financing is cut off, it could directly affect Jumia's business. Now, the underdeveloped infrastructure in Africa can complicate the business. The lack of proper needs to grow can impact the business, as many people living in Africa, the residents, would probably think that offline stores may be more simple, inexpensive, and less time consuming than going to the internet and going to Jumia, get the order, maybe not even get it. So maybe they just might think that offline is better to work with. Many of the countries that operates in Africa have also been known for political instability, and they have random changes in regulatory or government policies, like the one recently in Uganda, which restricted access to the internet. And changes like these in policies and regulatory bodies can directly impact Jumia's business. Economic slowdown in Africa can also impact Jumia's business. And there's many uncertainties in the legal system in some of the countries in Africa, as they're not fully developed legal systems. So for right now, it's a very tough market in Africa and what they're trying to work through. But in the future, they might get some success as more people are encouraged to shop online. But these are the main cons I see going on right now.
When you look at the 10Qs, they're in euros. So I will do a little conversion back and forth. But in 2020, the revenue was 139.6 euros, which is about 172 million US dollars. If you look at the estimates going forward from Seeking Alpha, you can see that they're still looking at 183 million in 2021, 262 million, these are US, in 2022, and 291 million. So that the revenue estimates are growing, but you can see that their PEs are still negative, and their EPSs, earning per shares, although shrinking, are still negative. The market cap's about 2.56 billion, with an enterprise value of about 2 billion. Shares outstanding 98.58 million shares, about 24% institution owning, and short interest about 14.5%. Cash is about 700.3 million with a debt of 14.14 million. Net income margins negative 101%. Return on equity is negative 43%. So if you look at, it's a typical company that we normally look at that really has some growing earnings, but because of expenses, it's not profitable yet. Let's take a look at the consolidated statement of operations. So you can see from the 10Q here that right away up right underneath the dates, you can see these are in euros. Okay, so I'm going to convert them over a little bit. So you can see the revenues from 2017 to 2020 euro wise go from 93 million to 139 million. In US dollars in 2017 it's 115 million, 150 in 2018, and then it goes up for 2020 is 172 million dollars in US. But again, if you go down, you see the gross profits, which were nice until you get into the operating expenses of technology, general administrative expenses, and other operating expenses. They just exceed the gross profits. So you can see that operating losses are all negative. In 2017, it's 154.7 million euros, and you can see it's about 150 million euros in 2020. So it's been kind of steady. I don't see it getting any better at this point after 4 years. The net losses, 2017, it's about 165.4 million, which is about 194 million in US dollar losses. And in 2020, it's about the same, 194 million in US dollar losses, which is about 161 million euros. Losses per share, again, these are ADRs, so it's not a true US stock. And in US losses per share in 2017 was about $2.55 per share. And in 2020, $2.41 per share. So you can see you're not gaining much. I like to see a little progress over 4 years for a company that they're making some money or at least moving in that direction. You can see that the current assets in 2020 are 337 million euros and the current liabilities are 122.6 million euros. So what that tells me is they're able to pay their short-term debts with what they have in current assets. So this is the cash flow that you can see that the net cash flow used in operating activities is negative. If you look at 2017, that's 117 million negative in euros, which is 141 million US dollars. In 2020, it's 98.5 million euros, which is 119 negative US dollars for cash used in operating activities. So again, they're not making enough money off their operations to pay for their operations. So you can see that they're going down. Net cash flow from financing opportunities, they got 187 million euros. Cash and cash equivalents, you can see at the beginning of the year is 170 million, and cash equivalents at the end of the year is 304 million euros. So they have cash, but they do have debt, but they are burning cash. So unless they get profitable again, you're going to find they're going to need to do another offering or some other type of financing because they're not getting in and out of operating activities. So based on this, it's typical. Company has rising revenues, but also rising expenses. I don't see any improvement at this point in getting better. They have some risk, and those risks include, they've had significant losses since inception, and there's no guarantee that they're going to be profitable in the future. Many of the countries of operations that they're into have or been characterized by political instability or changes in government policies, which is always a problem. Currency volatility and inflation may affect the business. They may not be able to raise additional capital at acceptable terms, if at all, to fund this operation in the future. And they have substantial amount of business in foreign currencies, which is subject to rate fluctuations. If you were going to kind of look at getting into this, I kind of went and looked at just the technicals. The stock price as of this video is about $22.50. Over the last 52 weeks, the stock has been from $7 to about $70, with the 52-week high in about February of 2021. So it's come down substantially off the high, especially in a high market like this. If you look at the stock price is 22.51. The 50-day simple moving average is at 27.88. So you're underneath the 50-day simple moving average. And 200-day simple moving average is at 33. So it's way higher than the current price. So you might want to wait for that price to come up and touch past the 50 and the 200. And then again, the RSI is about at 31.5, which shows kind of an overbought situation. But you would have to use your own due diligence and your own technical analysis ability to determine what price level you may want to come in if you're going to buy this company or you're going to do some swing trade.